Hey everyone, good afternoon, or should I say good evening? I am so sorry I'm running a little bit late today. We know life has a tendency to happen, and sometimes we get tied up and can't always meet deadlines, especially when you're doing live shows, because a live show is, or well, whatever you want to call it, it's just a little bit challenging to get here on time every time. Sometimes I'm sitting here waiting for you guys, sometimes you guys are sitting there waiting for me. I don't know. Well, greetings, welcome to Dividend Stock Talk, where we talk about investing for monthly and weekly cash flow. Today is Tuesday, April 11th. It is Tuesday 11th. It is 9:09 p.m. and we're just going to jump right on in and get started. You have to excuse me if I cough a little bit. I'm trying to get rid of this cough for who knows how long. If you've been watching these shows for a while, you'll notice I had this cough since December. Anyway, let's move on and jump on in. So here we go. We're jumping into our Think or Swim, and this is our, holy cow, I sold two of them. Nice. All right, didn't know what was happening, but I sold one today. I must have sold the other one yesterday, so I only have two positions in my dividend capturing. That's the dividend on steroids, where we look to get the added 2.5% coming into the dividend play. That's great. So we're looking at Macy's. Macy's would sell down 4,000 points. Wow, look at that. I should jump out of Colgate Palmolive. I should have got on there today with 86. What are we looking at? All right, CL is 73. Let's just quickly, for the fun of it, let's see what we're doing with CL. We're here, we're looking at this. This is what we're doing because, that's what we do. We're looking at dividends for cash flow. And Colgate Palmolive is an awesome company. It's been around for over 100 years. They've been on the Dividend Kings list for quite a while, increasing their dividend payments for over 50 years. That's great every year, over and over again. Okay, Colgate Palmolive starts the year off at $71. It goes in a trading range of between 70 and 74 for looks like 7 months. Right at election time. This is one of those few companies that actually went down when Donny Boy got into the office. Because look right here. 11/8, right on election time, she goes from 70 and drops all the way down to 66. She goes sideways for 1, 2, 3 months and then jumps all the way up sideways in a trading range of somewhere around 66. And then the middle of February, she jumps up back to the trading range of where we were, right around 73, going sideways for quite a bit. And now she's at 73.70. Now we're looking to get 74.91 out of Colgate, and it made a high today of 73.96. Okay, so we're looking at 74.91. Maybe we'll take a look at it sometime during the week, and $800 is a nice little profit. We can jump into something else because we have some good companies that are up on the list this week. If you got in the list, I'm going to go into that in a little bit and show you what the list looks like. You know what? Let's just quickly look at it now. We're talking about it. We might as well jump into it. Here we go. Here's the list. RELX is top of the list. Look at that, 100%. We're looking at dividends and steroids, DOS. Not that one. DOS. Here we go, right here. Only two? That can't be right. SIMO and Tub. Huh. All right, well, there's only two of them on the list on this one. However, that doesn't seem quite right, so I'm going to have to do some research on that. All right, so let's see what's on our weekly list. Costco, gotta love it. WY, TXN. Ooh, familiar. Ooh, Ford's on the list. But they're only scoring a 61 there. GT, don't know what that is. BX. Ooh. Mosaic. That one I know, but most of them I don't know. I have no clue. I feel bad about that. This is our weekly list right here. They're not that bad. Check out this weekly list. TXN, BHIETN, NSC, WY, BK, BX, See, Costco, everyone knows that one, and TXN. All right, so that looks good. A nice little list for us this week. Let's quickly go back to where we were. Forget where I was. Where was I? What was I talking about? Okay, so CL, we're going to take a look at that and think about getting out of it this week because we're up $800 on that one already. I mean, how much higher do we want to go? And I believe... All right, we'll jump out of that one. STX, we got out of that one today. That was pretty good. So hit our target there. CL, we'll take a look at that. Then tomorrow, 11th to 25th. AZZ. Oh, Lowe's. Ooh, we can jump right into Lowe's. How's that? Now let's quickly take a look at Lowe's because, hey, that's right there, right? Now, if you guys have access to the software, by all means, jump on in and take a look and see what it looks like. Ooh, look at that. 2014 and 2016. Now, Lowe's, we're going to cut them out a little bit slack because they are Dividend King also. They've been increasing their dividend payments every year for a minimum of 50 years. It has a low yield, and for some strange reason, in 14 and 16, it took a while for it to hit the target. But it did hit the target. And the nice thing about Lowe's, it has weekly options. And with weekly options, if you're carrying, right here, look at this. You're carrying this almost the whole 90-day period. Because it goes from, for the fun of it, let's check it out. Put Lowe's into the software. Hopefully you guys have this also. All right, Lowe's and go. Give us an idea of when they're paying their dividend. All right. January, April, July, and October. That's when Lowe's pays its dividends. Okay, let's get rid of that. Let's get back to where we were. We were right there. All right. Okay, so Lowe's has weekly options, and Race has weekly options also. Check that out, 35-cent weekly options and 67 cents. So let's go back to where we were talking about Lowe's. Okay, so Lowe's has a less than desirable yield. It's like 1.7. So we're going to let it slide because it's a Dividend King. They increase every year, and they're going to increase it again this year and increase it again next year. So here in 2014, you had to hold it for a little bit longer. I should say a lot longer than you wanted to originally. 2016 had to hold for longer, but other than that, it's all ones across the board. Let's quickly take a look at what the chart looks like. The 10-year chart for Lowe's, as I recall, looks pretty favorable. Yeah, how can you go wrong with Lowe's? Check it out. 10 years ago, we were we're at somewhere around 32, and now we're at 82. That's over 100% increase. So yeah, you got three things going for Lowe's so far. Now, number one is it's a Dividend King. Number two, it's one piece of software. So that was pretty good. Not the greatest in the world, but then again, I like it. Alrighty. All the same information. All right, let's quickly take a look at Lowe's. Let's get rid of the average. Okay, we want it to get in 10 days prior to and have it go up a little bit in and around the EX date. Okay, so you buy it 10 days prior to, or even 8 is better, 8 or 9 days prior to, comes up and it goes up a little bit, drops right around the dividend date, goes up a little bit more. It gives you enough time to maybe play some options, collect the dividend, and jump on out of it. It's a 35-cent dividend. It's not a huge amount, but as you can see, almost every year it hits it in the first day, except for last year in 2014. It didn't quite hit it. Okay, so Lowe's does make me kind of happy. Not 100%, but happy is happy. Okay, so that's Lowe's. Now, quickly, I'm going to show you how I do a quick little trade because I like Lowe's, so we're going to jump it. Wait a minute. Put Lowe's right there. L-O-W. Okay, so Lowe's started out the year at 76, goes sideways for a bit, jumps up to a trading range of of 80 for 1, 2, 3, about 4 months. It gaps down in August back into the trading range that it was started at the beginning of the year. And then it drops down again, went sideways again. Okay, and right around election she goes up. Not hugely like a lot of companies did, but she went back up to that trading range of 71 after bouncing off the low of the year at 64. Okay, then some reason or another, at the end of February, this thing jumps from 75 up to 81, and it goes sideways for quite a bit. Here's where we are right now at 82. Okay, 82.41. So let's take a quick look at Lowe's, L-O-W. Now, before we decide to buy any Lowe's, let's take a look at what the seasonality looks like so we can be looking forward to for the rest of the year for this. We want to make sure it's going to hit the target that we want. So here's where we are now. We want to isolate this part right here. So as you can see, Lowe's is basically going sideways throughout the summer. So this one may not be a good one to jump into to collect a dividend on. So I'm going to pass on this one. Sorry. Even though, wait a minute, you know what? Now, for this account, I'm going to pass on it because this account is looking for the 2.5% increase coming into the dividend. Now, the dividend is 10 days away. So that is a good thing, but historically speaking, over the past 10 years, it doesn't look like it's going to hit it. Darn it. Okay, so let's just jump back to where we were. Now, I told you Race had options on it also, weekly options. So let's take a quick look at Race, R-A-C-E. Now, that right there is a good sign. So where she is now and where it projects to be going in the next couple of weeks, I like that. It has weekly options. Seasonality looks good. Let's see what the yearly chart looks like. Back to the standard chart. Oh, that looks pretty awesome. She starts out in a trading range of 42, goes sideways for 4 months, and steadily increases from 43, sorry, from the low in the beginning of July at 38, jumps all the way up to 74, makes the high of the year, and now she's in a trading range of 71. Okay. Now let's put Race into the other software and see what the other software says. R-A-C-E. Plot the dividend. See how that looks. Now we're at April 11th, which is today. 10 days from now, it's the 25th. So let's plot the dividend. Why is it saying no data? Plot the chart. Now that's not right. And this is no data for Race. Wait a second. Let's quickly check when Race is paying out its dividend. Reset. R-A-C-E. It should be this month. Wow. May only has one. Why is that not seeming quite right? So let's go to this software and see what this software says for Race. Reset. R-A-C-E. 1 year. 1 year worth of data. How did that get to where? Okay, so it's only 1 year worth of data, so definitely does not make our chart whatsoever, even though it does have weekly options. And the yield, oh, forget it. Let's just drop this one like a hot potato. All right, so Race is out of the question. AZZ, CNHI. I don't believe any of these made my list for consideration. Tomorrow we're going to have another list, or I should say after midnight we'll come up with the other list, because they don't give you Tuesday the 25th until like 1 or 2 o'clock in the morning for this account. The other account it doesn't. I don't know why that is. So let's find out what else we've been looking at for the dividends on steroids. All right. Okay, let's go. RELX. Let's take a look at them. RELX. All right. That actually looks pretty good. However, the volume's too low. So we're going to have to see that volume, only 95,000 shares traded. Not a whole heck of a lot. Check out the average. This thing basically is a sideways moving chart, but then it moves up. I don't know. Yeah, I'm a little uncomfortable with the amount of volume on there. So let's take a look at what the 10-year chart looks like. Oh, the 10-year chart doesn't look that bad. All right, look at the dividends down here at the bottom. It's kind of spotty. All right, so I'm just going to say no, because that's two things right there I did not like. I didn't like the spottiness of the dividend payments down the bottom, down here. And I didn't like the volume. So let's see who else is up. Oh, there we go. ASM. Oh, we should have said no right away because they don't have any options on RELX. Okay. ASML. Yield. No. SKTO. 4 point. And the dividend's 34. 4.22%. Daily move is not bad. And it has options. Okay, so let's look at that one. SKT. Okay, let's put SKT in here. SKT. Let's see what that one looks like. Ooh, see, this one I like better. Now let me quickly explain to you why I like this one better. All right, let's get rid of the average line, first of all. All right, our average movement is about a little less than 7 days. Okay, that's about a week and a half. All right, I can hold for a week and a half. The dividend's 35 cents. It's not a lot. The yield is 4.2, and it has 2.2 million shares. Now, quickly take a look at here's the red dots, which represents the EX date. 10 days prior to the EX date, she's down here. And as you can clearly see, the green line is moving to the upside. So we can, based on historical performance with this chart, or this software, and even after the EX date, look, on average, she goes up. So that is good. That makes me a happy camper. Now let's quickly take a look at what she looks like for the 10-year chart. Because if we have to hold this for a long period of time to collect that 4%, ooh, I like this one. It's not great, but it's not bad. You know, so 10 years ago, she's at $20.80. Today, she's at $32.79, which is a little bit above 50% increase. Okay, now look at all the dividend payments. A lot of dividend payments down here on the bottom. She split once right here. See that purple S? I mean, she split all these diamonds, these D diamonds. All right, that's for the dividends. Okay, so SKT looks good. So let's get out of there. Get out of it. There. Come on. All right, we looked at SKT there. Now let's throw SKT up in here. SKT. Okay. So SKT doesn't look that bad. Wait a minute, is that the right one? Is that the one I'm looking at? Yeah, okay. So SKT does look pretty good. Okay. SKT works for me. Okay, the 4.2. All right, she closed at 32.6. The high was 42. The low was 30. The 1 year target's 35, which is great. 32-cent dividend, and it's a 4.2% yield. All right, this one looks good. So let's take a quick look at how she looks on the chart. SKT. Okay, so don't be frightened by the way the chart looks, okay? Because as you can see, it's a lot of up and down movements. Up, down, up, down, up, down, up, down, up, down, up, down. What we want to do is let the software dictate to us what we want it to do. Okay, so SKT starts out the year at 36, goes sideways for about 2 months, and before she jumps up to the high of the year of 42, goes sideways for a little while, and then drops back down right to around election time. Okay, she goes sideways for a little bit in the $33 area, makes the low of the year down here at 31, and she goes sideways in a trading range of 32.79 where we are today. Okay, so that doesn't look that bad. She's bouncing off. Yeah, up, and then you get down, you get up, and you get down. Now we get, 1, 2, 3 up days. So let's see what SKT looks like for seasonality. Seasonality is how something reacts year after year after year. Now they take all these charts and they just pile them on top of one another to get a composite or an average. And the red line is the average for the year based on the last 10 years. Okay, that's the way I have my charts set. Okay, now the blue line, or teal, or whatever color you want to call this, represents what it's doing today. This was back in January. She spiked up and then she made this drop, went sideways for about a month here at the end of February, then the beginning of March. She drops down to the low of the year, which is 31. Now she's right here at this little trading range, and this is what we can look for the next couple of weeks. Okay, here's where she is right now. And this, my friends, is definite uptrend going to the upside. So if that looks good, everything looks good for SKT. So let's buy some SKT. All right, now this is how, we have videos that, if you're a member, will show you how to do this, how to set up your trading account to make this trade. Right click, drop down button comes up, go to the custom buy, slide over, and you pick the one that you have preset. Okay, see, it's preset with a certain number. Now this is how I figured how much money I got to spend. I put in 5,000. All right, and I just hit buy. All right, and hit confirm and send, and it says rejected. Now the reason why I did that is when it says rejected, it's going to tell me how much money I have. See, I actually only have 47,000 to play with. So let's divide that in half. You do 2 positions, so I can do 2 positions of what is that? 2350. Okay, so 2350. All right, so let's open up a calculator. There we go. Okay. And how much was that stock? That stock was $35. Divide 35, and I can buy 1,300 shares. Okay. Okay, let's go back to buy custom. Pick this up, and 1,300 shares. And make sure the numbers are in the right place. 1,300 triggered trade by 2.5%. All right, so it's costing me 21,500. All right, that works. Okay, right there it says buy 1,300 to open, and sell 1,300 triggered by 2.5, limit good till cancel, triggered by order number 1. So as soon as this order is filled, this one simultaneously within a fraction of a second gets filled. Doesn't get filled, it gets entered right away. The fastest trade I was ever able to do was 6 seconds. I bought it, turned around, and sold it within 6 seconds using the auto set. I like to call it set it and forget it. I set it up, put the numbers in, and then I forget about it. And what happens is when the sale is made, it contacts me via email, let me know. Okay, so SKT made the cut. Oh, we weren't looking at those. We were looking at these here. Let's reset that. All right, we did SKT BMO. BMO is a 66-cent dividend, a 3.6% yield. Ooh, look at this, 82, 73, 97, and it has options. BMO, let's give it a check. Let's see what BMO looks like. BMO. Let's get rid of the average line. I'm going to average 3 days. I like that. Let's take a look at the numbers. It closed at 74. The high for the year is 78. The low is 60.93. It's got a 66-cent dividend. The yield is 3.6. It's got 500,000 shares trading. Okay, so 10 days prior to the EX. Remember, the EX is represented by the red dots. 10 days prior to, it's right there. And this one you definitely want to get out before the EX date, because look what happens after the EX date. Systematically, this thing drops, okay, and then starts to go back up. Now, do I want to hold it for that longer period of time to cash out? No. I want to jump in 10 days prior to the EX date, make my small amount, and I want to get out before the EX happens. I don't want to hold it past the EX date. Okay, I don't want to collect a dividend and then have to worry about what are we looking at. 50 days, that's like 10 weeks. That's 2.5 months. Do I want to hold it for 2.5 months to collect that? No, I don't. Give me a small amount, let me jump on out of there. That's what I say. All right, that looks good. So let's take a look at what the chart looks like for the last 10 years. BMO, let's cross our fingers. Bank of Montreal, let's see what you guys have done for the last 10 years. Make sure it's something good. It's adequate. Take a look at this. Okay, if you want to just collect dividends, fine. All right, 10 years ago, this thing was at 66. Now it's at 74. Oh, that's about a little over 10% increase. Okay, over 10 years, 1% a year. Don't really like that, but I like collecting the dividend. Okay, I can be happy with that. I'm not jumping for joy, as you can see, but it's it's a steady, it's a sideways stock. It's like a safe company. Look at it. I mean, you could take a look. 10 years ago, it's here, and it's like going sideways. Okay, that's what we call going sideways. I mean, yeah, you have your ups and downs. What? 69, then drops to 61, then it jumps to 74, then it drops to 57, then it jumps up to 65, then it drops to 53, and this is what stocks do. I've never seen a straight line stock, not sideways, not up and not down. I mean, even when Enron, if you guys remember Enron, when that tanked, that went down, Lehman Brothers, when that went down, it didn't just fall straight down. It staggered its way down, so you could buy, sell, buy, sell. Anyway, all right, so BMO looks good there. Looks good there. BMO. Oh, what did I do that for? BMO. Go, not reset. Don't hit the reset button. Start over again. Okay, it doesn't tickle my fancy hugely. All right, I can live. All right, so let's see what it looks like here. Let's go back to standard chart. There we go. And throw BMO in there. BMO. Enter. Okay, so BMO starts the year with the low of the year at 60.97. Within a couple of weeks, she jumped. Ooh, I hate when that happens. Okay. It's 60. Then she jumps up to 64, and she trades sideways for a good 6 or 7 months. Okay, then right around election time, she's at 63, and she jumps up to a trading range. Oops, let's go back here for a second. All right, from election time, see that right there? 11.7, 11.8, right in that area. She goes from 63 and jumps up to a trading range of 74 and goes sideways for the last 4 or 5 months. She's at 74 right now. Trying to keep an even keel here, and take a look at seasonality for BMO. Okay, so BMO is right here. For the next couple of weeks, we can project it going up. So yes, BMO is our second choice, and we're looking at 25 right here. It's 25.70, 750. BMO. Back to my calculator. That's 51. Let's clear this mess. Oh, how much was BMO? BMO, $74. Whoops. All right, let's clear that. 51,000. Okay, divide $74. That equals 600. You see, I go by the. It says 689. I could buy 689 shares, but no. I want to go with it, round it up to 700. Let's see how that works. Custom buy again down here, and we said 700 shares. Is that right? Yeah, 700 shares. And 7, and we sell 7. There we go. And we confirm and send. That's just telling me rejected. All right. What I'm going to do now is I'm going to change to a limit order. That way, when she opens up tomorrow at 74. Ah, crap. 74.12. All right. Looks like we're going to have to do the 600. All right, just to do the 600 and sell 6. All right, 600 buy, 600 sell. Auto, BMO, stock triggered by the 2.5% market limit. Good to cancel. Good to go. There you go. Okay, leaves me with $3,500 left. All right, that's that. The dividend investing. Now let's jump over to the options and see what we're looking at right there. Now options for this week is a little bit on the, well, I should say options this year is a little bit on the crazy side because we're looking at close to 40% return since the beginning of the year. Now, that's kind of unheard of because we're in the 4th month. That's like 10% per month. That, my friend, is crazy. Okay, a little over 1.5% a week, close to 2% per week. If I can continue that forever, that'd be nice. All right. What are we looking at? Okay, for the week, for the options part. Now, like I said, we trade several different accounts, but I only show you these two because they're the simplest and easiest ones. I shouldn't say the options are the easiest. The options, it seems to be the most profitable, but still a little bit on the safe side. What we like to do is we want to make sure that we're buying something where all the odds are in our favor. So we're still using all of the software that we showed you, looking at the charts, we're looking at the trends, and we're looking at how the stocks are relating to the option pricing. And let me show you a few. Now, APA we did last week also. We made 40%. This week I think we're going to make like 60% on APA just for the options that we picked on it. Okay, so here's APA right now. She started out the year trading in a range of, $53 for 4 or 5 months. And then in September, she jumps up until she hits a high right in the beginning of the first week of December, right around $68. And she drops all the way back down. And now she's at the support level again. She showed support back in August at the $48 level. And right here in March, beginning of March, she's testing the $48 level again also. So she's bouncing off the 48. She's settled into a 53 at the moment. Okay? So she's at 53.87. And let's see where our position is. We're looking for 53 and 53.50. So as long as this thing stays above 53.50 come Friday, I believe we're making close to 65% on it for just this week, which I think is pretty darn good. All right, that's APA. We liked it. We're not going to be able to do this one next week because next week is when they're actually paying their dividend. And what we take, if we did the option, is going to travel right into after the EX date. And that's not what we want to do. So I got to play it last week. I got to play it this week. And if I want to buy it to collect a dividend, I will. But don't think I'm going to because I profited quite a bit off of it already. That's where we are with APA. Get an idea where APA is going to go for the rest of the week. That's all we care about is for the rest of the week. Okay, here's where she is now. see the crosshairs crossing right there. 54 and right here. What I want it to do is basically just go sideways for the next couple of days. Basically stay where it is. So everything's pointing in that direction, which is a good thing. All right, bring this back to standard and let's check out C. Citigroup. Now, Citigroup started out the year at 41, jumped into a trading range of 44 for about 4 months, and she jumped up a little bit to 46 to 48, and then right around election time, she jumps from 48, jumps into the $60 area, and she's been trading in the $60 area for quite a while. But she's at 59 right now at the moment. Let's check out our position. What are we looking for? We're looking for the 59.50 calls. So she's at 59.03. That, my friend, is not good. So why did she open up so low? You know, she opened up at 58.68. Why is that? You know, yesterday she opened up at 59.36 and closed at 59.28. So why would she drop today to 58.68? The only one who knows that, you know what, the strangest thing, the only one who knows that is the market maker. He's the one who sets the price first thing in the morning. So you got 4 numbers. You got the open, you get the high of the day, the low of the day, and the close of the day. Out of those 4 numbers, only one is controlled by one person. That one person is the market maker. Okay, so tomorrow, he's going to decide what the opening bid is going to be. It's like, how do you figure it out? Shouldn't it be what the last trade was the prior day? No, it doesn't work that way. Okay, so yeah, she closed today, like here are the numbers right up here. Okay, here's the opening, this is the high right here, this is the low, this is the close. Okay, now, like I said yesterday, she opened up at 59.36. Okay, she had the high of 59.98, low of 58.98, but it closed at 58.28. So yesterday was a down day. So if the closing price is 58.28, wouldn't it be great if it opened up today at 58.28? No, it didn't. Today it opened up at 58.68. That's a huge drop from 59.28. It's almost, well, anyway, it's a big drop. Okay? So the market maker is the only one who makes up his mind on how or what the market's going to open up as. Okay, so as long as Citigroup stays above 59.50 at the close of business on Friday, we'll make a profit off of that one. And I do hope so, because I really don't want to have 5,000 shares of Citigroup. But let's just check and see where they're going to go in case we do. Okay, it's not bad. Looking at a little uptrend for the next couple of days. I can deal with that for the next 3 to 5 days. But after that, I don't think I'll do it next week, because next week she looks flat. You know, so for the rest of this week, a little bit of uptrend. Now, this is not guaranteed, so don't think you can go in there, make this trade, and expect it to happen. No, this is just historical information. Over the last 10 years, this is what the stock did. That's all. This is what the stock did over the last 10 years combined on average. Okay? Odds and probabilities. Okay, that's what we're looking at. Odds, probabilities, looking to win. Okay, so we bought the 59.50s. So as long as she stays above 59.50, we win. Right now, we're losing, but let's jump on CL, see what CL looks like. Okay, put CL in, CL. Now, Colgate-Palmolive started the year at 71. I just showed you this on the other account a little while ago. She trades at 71 for about 3 months, jumps up to 74, trades about 4 or 5 months there, and then right towards the end of October, she drops all the way down into this little trading range right around election time and goes sideways in the 66 area. Then, towards the end of February, she jumps back up to the 73 trading range where she was earlier to settle in at 73.70. And then where are we with CL? CL, we have 50 contracts, 73, 73.50. Okay, so we're 20 cents in. Now, the reason why I say we get odds and probabilities in our favor, because stocks move 3 ways, up, down, or sideways. Okay, so with this position that we have, if the stock goes up, we make money. If the stock stays the same, we make money. Okay, and if the stock goes down, it can go down 20 cents, and then we're still making money. So 3 in our favor. Okay, so you have the 3 pieces of software all saying that Colgate-Palmolive is a good company to get into, and it's a dividend king. Dividend king. Good company to get into, and it's an uptrend, and seasonality works. Okay, the position that we're in, I honestly don't remember right offhand. I remember what APA was because I was like, whoa, 65%, that's great. But I'm pretty sure CL is probably around 30 or 40%. So we can make a 30 to 40% return on our money by Friday, as long as the stock stays above 73.50. Okay, it's at 73.70 now. It's in an uptrend. The dividend's coming up. Historically speaking, it's always moved up before the dividend. And remember, I told you, odds and probabilities. Is it guaranteed? No, but the odds and probabilities are in our favor. Okay, anything can happen between now and then. That's why I didn't take a huge position on this, only doing the 50 contracts. All right, that's CL. Hasbro. Ooh, I made a lot of money on Hasbro last year. Was that this year? No, that was the beginning of this year. I made a huge $6,000 payment on because it just went through the roof. Okay, Hasbro started out the year somewhere right around 79. She jumped up to a trading range of 85 and traded for like 3 months that way. Dropped to a trading range of 81, went sideways for a good part of the year. All right, back to that support level at 77. Okay, jumps up, tries the 83 trading range again, but no. Some strange reason, the beginning of February, she goes from 82 and jumps up to 96 and goes sideways to be in the $96 area at the moment. Why did that happen? I don't know. Look at the volume spike. The volume's like way down here, and all of a sudden, that's like quadruple or quintupled. I mean, that's a huge amount of volume spike. Now, there is a trading strategy called volume spike trading, and it usually only looks at stocks that have 300% more or 300% or more average volume than the normal average. So, like if your normal average, if your normal trading average is on 3 million a year, 3 million a day, and all of a sudden you're at 12 million, that's a sign that something's happened. So as you can see, if I isolate this just a little bit, let's go this way. I see your volume's way down here, okay? And then its average is right down here. But look at this volume spike right here on this day right here. Some kind of news came out. I don't know what it is, and I honestly really don't care, okay? But usually, when you have a volume spike like that, the very next day it's going to follow suit. The volume's not going to be the exact same, but it's going to be another volume spike, okay, more than average. So the volume spike strategy is like when you see 300% increase in volume for one day, the very next day you get in and you buy at the open and make a nice little profit. Does it happen all the time? No, nothing happens all the time. Well, I shouldn't say that. Death and taxes happens all the time. But trading-wise, nothing happens all the time. Make money, lose money. Just always try to limit your losses. Okay, so where were we? Let's get back to where we were in Hasbro. This is where Hasbro is at the moment. For some strange reason, she had 1, 2, 3, 4, 5, 6 down days in a row. Okay, so you have support right down here. She went way past support right there. My assumption is she's going to go up again tomorrow because she's testing that support level. Testing it, you never know. It may work, it may not work. But seasonality, let's check and see what that does. Here's where she is now. So we're looking at the next few days. Have a little bit of an uptrend. Okay, and then she's going to go sideways. So yeah, we'll be able to get one more week out of this one. Like that's a weekly option. So yeah, jump one more week into this, take our little profits, and then jump on out. Where are we right now with Hasbro? And Hasbro, we're up 730. Okay, that's good. Okay, now Lowe's. Let's jump right into Lowe's. Lowe's, I showed you that on the other trading account, but let's put Lowe's in here. LOW. Lowe's is Dividend King, so that's going forward. That's one of the reasons we got it. Everything looked great. That's why we're in it. All right, she goes sideways in the 76 area, jumps up, goes sideways to 79, jumps up again, goes sideways 81, then she drops all the way down, right onto the election. Right onto the election, she jumps back up, jumps into that $72 area, and way back to where we are now, the $82 area. Now, I'm not going to get into a lot of chart reading, but you can see right here from this mark down here, if you can draw a line from the top of here to there, okay, and the bottom of here to there, that is what they call a pennant. And it's compressing pennant, okay, which means eventually the stock is going to go one way or the other. And as you can see, it's got 4 days to the up direction, so that's pretty good. Seasonality-wise, for Lowe's, not the greatest in the world, but like I said, she's a dividend king, and we're looking to see she's going to go sideways. I'm not saying she's going to go sideways, so don't go out and bet that it's going to go sideways. Historically speaking, looking at the chart I'm looking at, looks like it's going to go sideways. Okay. Now, we're just looking for it to stay where it is. All right, let's get back to where we were. Okay, so the seasonality chart shows it going sideways. Everything else shows it basically staying where it is. And we are 82.50. All right. So we're 82.41, and we want to be above 82.50 by the close of Friday. Now, like I said, it looks like it's in a pennant. Okay, compressing pennant. And it looks like it peaked somewhere right around here. So this could be the uptrend that we're looking at. This could be the high of the pennant. I don't know. Or it could be retracing and compressing a little bit more. I really don't know. But what I'm looking for is I'm looking for this thing to stay above 82.50 by the close of Friday. Right now we're at a break-even point with Lowe's. Because we're up, 145 for the day, but down 330 for the whole position at this moment in time. So we're kind of hoping that this baby comes up a little bit and can stay above 82.50. But let's quickly check, see if we have any questions, because I'm basically done with all this. TJ Maxx, we went over that last week and the week before and the week before. We're waiting for it to drop down to 75. Right now she's at 76.99. TJX. Yeah, a long time ago I bought some and I got stuck with it, and we're waiting for it to drop down to 75 so we can get out of there. Alrighty, so let's go find out where we are. Oh, questions. See if we have any questions. Hopefully not. All right, I recommend Mucinex. Thank you. Recommended cough Mucinex. It's not really cough. My doctor said it's postnasal drip syndrome, allergies is what he says. So last thing I want is another thing to be taking on a consistent basis. All right. Anyway, this is James. I'm going to be signing out for now, and we will catch you on Thursday. Remember, Thursday we're going to be going just basically doing another wrap-up, and then Friday morning, on Friday afternoon, just before the market closes, and see what we're going to be doing for the rest of the day. All right.